Do you constantly find yourself taking profits too early in your swing trades, only to watch the stock continue soaring without you? Are you leaving massive gains on the table because you're afraid to hold on to your winners? What if I told you that the key to capturing explosive profits in the stock market is simply knowing how to let your winning trades run? In this eye opening video, we're going to walk you through a real life example of a recent trade in SMCI that we called in the MTG Tribe chat room. Step by step, we'll reveal the technical reasons behind our buy entry and the cutting edge techniques we use to exit the trade with the staggering 80% gain. And if you think an 80% gain is impressive, just wait till you see what's possible when you master the art of holding on to your winners. Stick around until the end of the video because we've got a jaw-dropping bonus for you. We'll show you how we could have managed the SMCI trade even better, potentially capturing a mind-blowing 150% gain. I'm Rick Petticelli, head analyst at Morpheus Trading Group, and I've been mastering the art of swing trading for over 20 years. At MTG, our proven strategies and decades of experience are the foundation of our success, and we're passionate about empowering traders like you with the tools and knowledge you need to succeed. So if you're ready to take your trading to the next level and start capturing the kinds of gains you never thought possible, smash that like button, subscribe to our channel, and let's dive into the world of holding on to big winners together. So SMCI, 80% gain, pretty good. Tough to beat. It was an 80% gain in less than 4 weeks, less than a month. So, that's ideal. For most trades, for our style of trading, intermediate style of swing trading, ideally, we'd love to see 100% gain in 8 weeks every time. We often don't get that. But we're looking for outsized gains when market conditions are strong. So a 20% gain is a start. We're looking for 30, 40. And if we can get a hold of a strong winner, we're looking to ride that 60, 70% gain. Hopefully you could turn it into 100%. Usually at that point, though, we're not going to hold much past 100%. We're looking to exit the position and move into a stock that isn't so extended. But that's just our style of trading. There's others who will hold on for 2, 3, 400% and sit through a year or two of earnings. So just depends on what you want to do. So why was SMCI on our watch list? Well, I think that's best answered by going to the monthly chart and looking at this big breakout from this 6 years of chop, really. Price action tries to get going through 22 and through the early part of 23, but doesn't really explode until looks like May of 2023. So over 6 months, though, we see about a 400% gain. Let's drop down to the weekly chart. So after a 400% advance, anything that's 400% or more, we like to see at least 6 to 12 months of sideways action. That's just what we prefer. Generally, liquid stocks that go into that big of a move will need some time to digest those kind of gains. Maybe if there's a stock that's going from 5 to 15 or 5 to 20, could maybe go from 20 to 30 without much of a pause. But when they're this liquid and this big, these stocks tend to need a bit more time to build out the base. So we're looking at this tight action right here. It was a 40% pullback off the highs, I believe, 37% actually. 38, which is fine. If a stock were to go up 100% and pull back 20, 25%, that would be a very tight pullback. We often see pullbacks of 20 to 25% in stocks that go up 30% during the last run. So to have a stock go up 400% in 6 months and then pull back only 40% or just under 40, that's pretty darn good, So that's the main reason why it's on our watch list. However, we're looking at what to buy in early November following the buy in the NASDAQ. We had a buy signal in the NASDAQ on 11/2, and that's when we're looking to put money to work in the market. And, in early November, SMCI hasn't even broken this downtrend line yet. It's not near the highs, so it's probably not top priority for us. Let's switch on over to the daily chart so we can get an idea of what's going on here with a little bit more detail. Like I said, we're not really paying attention to SMCI. I don't believe until mid-December when the price action breaks this downtrend line here with some strong price and volume action on December 15th through the 18th. And we're monitoring the price action here on the pullback to the 50. And what we do like about this pullback to the 50, it is a change of character in that every rally through the 50, which is this red line, is followed by price pushing back, falling apart back below the 50. Here's another move through the 50 and then a sell-off below the 50, another move through the 50. And this time, though, price held the 50, didn't hold the 50 this time or time before. So a change of character there. The price is still having trouble pushing through 326, 325 area. But That all changed on January 8th and 9th, and this is really when we began to watch SMCI. We could have bought down here. That would have been a really nice entry, but we didn't. However, we were monitoring the price action in around January 12th and 13th for a pullback to the 8-day EMA after this strong thrust up. However, the price did disappoint and it pulled back to the 20-day EMA, a little bit deeper than we'd expected, but we're still watching the price action because you don't know if it's going to just turn around and rip higher. The price did gap higher on January 18th, but then closed well off the highs of the session. Still held on to the 20, so that was a positive, but felt like the price needed some more time to chop around. However, after the close on January 18th is when SMCI pre-announced, and after the market, the price action just ripped higher, and that's when we knew the following morning we had to be on watch out for a potential breakaway gap type situation. And that's sort of what played out. The price action didn't break away. There wasn't a breakaway gap in that it was above the highs of the base, but there was a pretty big gap from above the prior day's high, and certainly, let me see, almost, more than 10% above the prior day's close. So that's a pretty strong open. And we were watching the open during the first few minutes, and we bought around 354, or we mentioned SMCI as something we wanted to buy, something we liked on the open. A few minutes into the session, we noted that the volume was extremely heavy, which was a great sign. And it was breaking out from this longer term base. And this comes after that explosive move in 2023. So it's shown the potential to be a big mover in the past. So let's see if it can do it again, right? So we bought around 354, and SMCI closed up about 25% or so on just really big volumes. So just a great close. When we see this type of action, we really want to do almost nothing at all. This is what we love to see every time. So our mindset here is don't touch our position, just let it go. There was a few days of chop here. For aggressive traders, there's a chance to add. And here is the 5-day EMA, and the green bar is the 8 EMA. So it just continues to push higher, holding the 5 the whole way up. Nothing out of the ordinary here, except on this day right here on February 5th. It's a pretty big gain, and this is the first time I believe that the price action is 20% extended from the 8-day EMA on the close. So that's just a sign that the price action is getting a bit extended, and we may want to think about capturing some gains, selling to strength, or just having some kind of game plan in place here in case the price does reverse lower. Also, from our entry to the highs of the day was a roughly 90% move. So if we're looking to capture, the stakes are high for us when we have an 80% winner, because the 80% winner can quickly turn into a 100% gain, and it can also turn into a 60% gain. And what we mean by that is, if you're not paying attention to what's going on and you had a 90% gain and you don't have a plan in place to capture that gain, if we were to let the price action come back beneath the lows of this day and stop us out, it would be a 68% win. And that would be a little bit disappointing, not the end of the world, but certainly something that we felt we could probably do a little bit better on. So we ended up selling around 645 after this gap up the next day that failed to hold and went lower, as we're up roughly 93%. So we sold intraday and then put our stop beneath the day's low and ended up getting taken out in the morning session for about an 80% gain, which is great. However, the price did reverse and close near the highs of the session, which was a sign that we may have taken our money off the table too quick, and we might have been a bit too fast with that sell. So we sold a bit too soon, and that's probably because we were thinking more about the money than doing the right thing. So as we look back at this trade, doing the right thing involves looking, what moving average is this stock obeying? Pretty much the whole way up, it's holding the 5-day EMA. We're looking usually at the 8-day EMA, but sometimes in very explosive situations, the 5 works even better. So the price action continued to hold the 5, and that's probably what we should have used for our selling guide. Maybe not for the full position. I could certainly see selling some here, capturing 80% on some of the position, but there's no reason to sell the full. And we'll see that continue to play out, and we don't have any excessive gaps here either. The price is still holding on to the 5-day EMA as it rallies, and there's the big gap day. First gap. Maybe we have a stop beneath this day's low, which would also be below the 5-day EMA. The next day, there's another gap. And now it's getting excessive. We have 2 big gap ups. We're into $1,000 here. It's up 200% from the entry if we're still long. So if we were still long, this is where we'd probably want to exit. If there's any kind of false gap up or failed gap up, that's where we'd want to get out, maybe below 1,000. So that would be a perfect ideal sell in hindsight only. What we think might have been a more realistic sell is below the prior day's low. Now it's still above the 5-day EMA, but this is just excessive action here. In 3 sessions, we have a 45% gain. The candles are wide. There's two gaps in a row or three gaps in a row, really. There's a nasty reversal candle even before, at this point, even to the prior day's low, that's a 15% reversal. It's getting pretty ugly. And this is, again, where if you're sleeping on the trade and you don't have a plan in place and you just give into the emotion of the moment, you could have a trade that was up as much as 200%, around 1,000. That win could turn into 120%, which is still pretty darn good. But you're giving back a ton here if there was no plan in place and you're just exiting beneath after this nasty down day. You get a little disappointed and say, I should be out of this thing. So you get out the following day. You're out at 120%. Still good, but gave a ton back. So this is where the 5-day MA and then waiting for some sort of exhaustion sign as a combo could work as a really good selling guide. We often use the 8, but when the price action on the open here at the highs of the day, when the 8-day MA is 25% away, you're going to give back a ton of money on that trade. And if you're looking for a 300-400% move and you're willing to sit through everything, maybe that happens and you could, sit through that sort of pullback. But as I mentioned earlier, our preference is to exit positions when they're up 100% in 8 weeks or less. That to me is just, what we're always looking for in a trade, and we rarely get that, but that's what we always hope we get. And we're always, once we have a stock that has the potential to make that sort of move, we want to do our best to ride that wave. We managed an 80% gain, which was fine. But as you see, using the 5-day MA, which was the moving average it respected, we could have held on for a 150% gain. So just a quick view of the main points of this video. SMCI, why was it on our watch list? Because it had an explosive price action prior to the price chopping around, 5 to 6 months. There was a powerful 400% advance. So generally speaking, once a stock shows that it has that kind of explosive potential, we want to keep an eye on it because it could do that again, which it did, and went sideways for several months, and we're monitoring the price action on the weekly. It tightened up, showed a change of character, and then broke out here. And so once we capture a breakout and it shows really strong potential and that it just moves out right away and the price and volume action is powerful, you'll know what I'm talking about. When you're in one, it's not a 10% gain after 2 to 3 weeks. It's right out of the gate. It's strong. It's powerful. It's moving every day. It's going higher and higher. You can't believe how it's just ripping higher. So that's what we're looking for. Once we see that we have that kind of winner, that's where it becomes imperative for us to sit back, do nothing, and let the moving averages help us out. The shorter term moving averages, that is the 5 and 8-day EMA. And then if possible, sit with the position as long as you can until it either takes out a prior day's low once it's up 80 to 100% or more, or you could sell it to strength after a 2 to 3 day advance. That's, really parabolic move. And maybe you're lucky enough to catch this gap up that fills. If not, there's no shame in selling the break of the prior day's low for 150% gain. Now, if you're ready to take your swing trading to the next level and start applying these powerful techniques to your own trades, I've handpicked 2 more videos for you to watch next. Just click on the videos on your screen right now to continue your journey towards mastering the art of holding on to big winners. And if you want to take your trading to the next level and gain access to our exclusive MTG Tribe community, where you'll receive our top stock picks, in-depth analysis, and real-time trade alerts, head over to morpheustrading.com and click on stock picks to get started. Join us today and experience the power of our proven strategies firsthand. And just a reminder to comment below if you've ever left a profit on the table, just sold too soon and let a big winner take off without you. We all have. So just share your story below. At Morpheus Trading Group, we're passionate about helping you achieve your trading goals. Stay disciplined, trust your process, and never be afraid to let your winners run. Trade with confidence, and we'll see you in the next video.